All right, welcome to the video, folks. Anthony here with Hawkeye Traders. Hope everyone's having a wonderful day, and what a day it was. I want to bring your attention very specifically to the 8:30 candle. Okay, we got some economic data this morning, and we did, in fact, at the time, print the highest buying volume so far in the session. We also printed, with doing so, what we call at Hawkeye a wide bar. Okay, so when wide bars are printed on ultra or high volume, it is very notable and we need to pay very close attention. Now, you're going to go, Anthony, that's all great and well. Anybody can look back in hindsight and go, oh, wow, you really identified a wonderful trade. I did not do this in hindsight. In fact, I did it live in front of traders who were trading live money. Why? Because what credibility could I offer you if everything I showed you in the videos I produced were in hindsight? Anybody can do that, okay? I trade actively on a daily basis. I have spent many years becoming the trader I am today, understanding not only the technical components, the psychological components as well, and I have gone on to help many folks overcome many different hurdles. So I want to really dial into this from a very humble perspective. Okay, I could stomp my feet and chant about what transpired today, but at the end of the day, ultimately, it comes down to being able to do the same thing with a great deal of discipline very consistently. Okay, that's what trading is. Trading is a business of probabilities. If you don't understand that, you need to. Okay, there's plenty of books on it. I can teach it to you, but having an edge, which consists of a trade plan and risk management, combined with an approach to the market, meaning your analysis or what your edge is composed of, that gives you the insight or inkling to enter the market and put risk on. When those things align, you have to be ready and willing from a psychological perspective to place the trade without reservation. Okay, you just need to know that, hey, if I do my job right over and over and over again, every time the market gives me this opportunity, over time, I should become a very profitable trader. So I want to dive into the technical aspect, right? I've spent a lot of years becoming this incredible market technician, and a lot of years also trying to become this incredible trader. So it's been a journey of two different things that I've had to mesh together in order to be the best version of myself that I can be. Now, again, from a place of being extraordinarily humble, I still believe that I learn something new every single day, not only from my own experience in the market, but from experiences that traders share with me as well. So the reason I am over the moon excited to have the opportunity to share Hawkeye with you is because I found this company. Okay, I was a paying customer of this company. Right, Hawkeye has not reimbursed me for what I've spent with them to have their indicators. Okay, so this is not like some hired sales pitch. Right, I'm just this guy who's really passionate about being a trader, being a market technician, and having the tools to mend those things together for the best outcome. So this morning, I'm live in front of traders. Okay, I want you to have perspective. This is not hindsight. Live, people are present with live trading accounts, making decisions on their own behalf based on what their edge, trade plan, and risk management is, alongside with the analysis, interpretation, and expectations I'm providing. Ultimately, it's up to them whether it makes sense for them or not. I'm not here to dictate anybody's trades, but I can certainly share with you my experience as a market technician, and you have the opportunity to decide, again, if an opportunity is right for you. So I want you to look closely here at the 8:30 candle. This is what we call a wide bar. All right, and I also want you to look at the bottom here where we have high buying volume, the highest buying volume since the session here got kicked off. This was built off of an economic data release at 8:30. Okay, we start consolidating, and I open my mouth and say, listen, if we cannot close above this 830 candle, closing above the high, which is 53.68, if we cannot push and start closing candles above that, that's it. We're going to roll over. Okay? Where are we going to roll over, right? Because that's the next important part. This level right here, which I drew, which represents market structure at 53.6625. Specifically, if we close below this level, there's a better than not chance that we're unsuccessful in taking out the high, and we start the process of pushing lower. Okay? Now, I'm a big proponent. Pay yourself, protect yourself. As the market offers you the ability to take profits, you should do so. You should advance your stop to break even, and then respectively based on your personal trade plan. So in doing that, I want you to just have, an understanding of how powerful understanding the relationship between volume and price action is, and what Hawkeye is able to provide for you so that you are able to do this for yourself. Because from 8:54 a.m. Eastern Standard Time, I want you to just kind of watch how the day plays out. Okay? Just take that in for a moment. All right? Just take that in for a moment. And I want you to take a look here at what the risk was. Okay? I'm going to circle back here. I want to zoom in. This will auto adjust in a second. Just give me a second. The risk here is 12 ticks from entry to high. 12 ticks. That's what you're risking on the S&P 500. Okay? And now I want to talk about what the entire opportunity presented. And now, trust me, I'm not expecting you to cover at the absolute bottom. But my point is, there's never any harm in allowing a trade, at least a very small component, even if it's just one contract, of your position to continue running. Why? Because the only way you're going to get a 30-to-1 risk-reward ratio is if you allow that to happen. Okay? And again, I'm not saying that you'll ever cover at the absolute bottom or you'll ever sell at the absolute top. It's not going to happen unless you get extraordinarily lucky. But the point of the matter is, and this is the way I trade, I'm not saying it's the way it's right for you, but the way I trade is I cover or sell, depending on the direction, the majority of my position fairly quickly. So if the trade goes back against me, I still have covered the risk I had taken and then some. And if the market graces me with more opportunity to continue to pay myself, I will, right? Like I'll leave maybe 25% or 30% of my trade on, and that I'll break up into pieces if the market continues to bless me with more. But if it doesn't, it's okay because I offset my risk by the first profits I took. But guys, we're talking about 30-to-1, 366 ticks on the S&P 500 by simply being able to interpret the relationship between volume and price action utilizing the Hawkeye tools. Okay? Now, the tools aren't going to do the interpretation for you. The tools are going to give you the clues to say, okay, Mr. and Mrs. Trader, we recognize that when there's ultra high or ultra low buying or selling volume around a wide bar, that we need to start analyzing what the market is doing around that area so we could start putting together a thought process that would allow us to, again, interpret what could transpire next. Now, guys, like I said it before, I'll say it again. I did this live in front of traders who are trading live money accounts. So I just want you to be aware that this is not hindsight, and this is credible because I have people that can back me up and say, hey, yeah, Anthony, I identified this in real time. Now, I want to take a minute and I want to go to some of the other major indices, okay? Particularly the NASDAQ, which we were watching. This all transpired too at the exact same time, 8:54 a.m. Eastern Standard Time. Let's just take a peek at what the NASDAQ offered. 1,549 ticks. Again, not saying that you'll cover at the absolute bottom, but the opportunity was there. Right? The opportunity to ride this short could have transpired basically all day long. Let's look at the Dow. right? I'm just looking at the major US averages. Same thing, okay? 8:54 a.m. Eastern Standard Time. We dropped some 734 ticks, okay? And for those of you who like to trade the Russell, because I know that there are lots of folks out there that like to trade the Russell, we'll take a look, okay? I don't personally trade the Russell, but there's nothing wrong with trading the Russell. 8:54 a.m. Eastern Standard Time puts us right here and gave us the chance here to pocket 528 ticks. Guys, we're talking about a lot of money, okay? Is every trade going to produce this? No. The question is, are you going to be able to identify the trades that produce the potential of paying you huge moves? To my knowledge, and I could be wrong, I believe May 23rd, 2024, year to date, this is the biggest broad market indices sell-off of 2024 so far. Okay? I could be wrong, but to the best of my recollection, this has been the strongest day that we had a sell-off broadly across all four of the major averages, right? A lot of people don't talk about the Russell, but I know a lot of traders trade it, so I did want to include it. The fact of the matter is, all of this opportunity was simply identified. I'm just going to zoom in. This will auto-adjust, just so you can see what we were looking at, all right? Like, this is what we were looking at real time, and I'm obviously exaggerating the size. Market's pushing higher. This candle very specifically correlated to this volume very specifically, and the inability to close above it very specifically led me to believe that the market was done. The close below this market structure line that I drew myself live, credible evidence to prove that, was the trigger for price action to sell off. Okay? You have to be ready and willing to understand what's happening, analyze it, interpret it, provide an expectation for it, see if all of those components fit your trade plan. If they do, and the risk management meets your tolerance, you have to be ready and willing to say, okay, I'm going to risk 12 ticks. I'm going to zoom out so it'll populate it. I'm going to risk 3 points on the S&P 500, or 12 ticks, 4 ticks per point, with the opportunity to pay and protect myself along the way. As soon as I start paying myself, at least this is what I do and what I've preached to people over the years, again, it's all personal preference. As soon as I start covering or selling my position, I move my stop right to my entry, maybe a tick or two inside of it, just in case we do get stopped out, that at least I cover the bid-ask, right, of the stop market order. And that's it. And then I just start spreading out the balance of my position, because who knows? You never know when you are going to get the biggest sell-off of the year to date. You don't know, okay? You have to understand that. You do not know. I don't know. You don't know. Nobody knows, okay? But you have to always be ready and willing to be prepared that if it were to happen, am I going to capitalize on it? Because if you just took a little, 10, 12, 15, 20 tick, oh yeah, I got my 2-to-1 or I got my 3-to-1, you missed 30-to-1. And again, I'm not saying that you would have covered at the bottom, but I am saying that you did leave a lot on the table. So I encourage you, if you're a one contract trader, maybe consider trading micros, right? Get 10 contracts. You can spread them out. If you're a multiple contract trader, maybe think about, hey, I'm going to cover the lion's share and then I'm going to spread the rest out, or however you want to do it. Again, at the end of the day, I can't tell you how to trade. I don't understand your personal finances. I can just tell you from experience what I have done and what people I have helped over the years have done to experience the opportunity to capture bigger moves like this. Because again, none of us ever know when this is going to happen. But what we do know is there is a relationship between volume and price action that when it is understood and employed, we can identify opportunities like this literally calling the top of the biggest year-to-date sell-off live. So if you want to learn more about the Hawkeye tools, the Hawkeye method, Hawkeye mastery, understanding price action, there's links below this video. I encourage you to click on them, consume the content. All right, guys, really, this is worth your time, I promise. Okay, I'm going to give you my personal email. I'm also going to give you the email to my Hawkeye concierge team. I want you to reach out to us. I want you to ask questions, right? If it's not right for you, it's not right for you. But if you're willing to study volume and price action, which I very much so think it's worth it, you have to at least put the opportunity on the table to try to succeed at doing this, because if it can be done by me, it can be done by anybody, right? So do that, consume that content, reach out to us, let us help you along your journey. If we're able to, we certainly will. And if this is not right for you, it's okay, right? Like we can still be friends, right? But if you enjoyed this video, like it. If you haven't subscribed to the channel yet, please do so you don't miss the next video coming out. And of course, leave a comment below. I'll personally answer it, but don't hesitate to reach out to us. We are here to serve you. So I appreciate your time. I know this was a lengthy video, but I felt like this really warranted investing the time into discussing, identifying the opportunity and what the opportunity presented broad market. So I appreciate each and every one of you. God bless. I will see you in the next video. Be well, and may the market trend in your favor.